Hi, my name's Rob Case. I'm a partner here at Randall Payne. Today I wanted to just talk around some of the principles of capital gains tax, some of the potential pitfalls, and why you might want to speak to us should the need require it. So in summary, capital gains tax is a tax on the profit when you sell or dispose an asset that's increased in value. So for example, if you bought a painting for $5,000 and later sold it for $25,000, that means you'd have made a gain of $20,000 and you'd normally be required to pay tax on it. Now, disposing of an asset includes giving it away, transferring it to someone else, or even maybe swapping it for something else. Finally, you only have to pay capital gains tax on the total value of gains above an annual tax-free allowance, otherwise known as your annual exemption. But will very often have to at least report it to HM Revenue and Customs, either at the time of the transaction or via a self-assessment tax return. Seems simple, right? As with any tax, however, there are complexities. For instance, the rate of tax you pay depends upon the type of asset you dispose and the amount of income that you have in the year that you dispose it. If it's an overseas asset like a holiday home, there may be complications overseas with foreign tax. Or maybe it's a share of an investment that you inherited from somebody else. So how do we help? It's always best for us to become involved before you actually sell or transfer the asset. Our team here will want to understand the transaction and the reasons behind it to best provide advice about any exemptions or reliefs that may be available to reduce the burden of the capital gains tax. We will also outline the implications about how best and when to report it to HM Revenue and Customs. So if you're looking to dispose of an asset that may result in a capital gain, why don't you get in touch?